Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and I'm excited to share today's story with you. We're starting off with a look at the current market trends and some expert insights from Rajesh Palvia, who shared his thoughts on the defense sector and metal stocks. According to Palvia, the defense sector has seen a strong rally in recent days, particularly after the India-Pakistan geopolitical tension. However, he advises that those who have bought these stocks for trading purposes should consider booking some profits, as some cool-off action is expected. On the other hand, Palvia suggests that investors with a medium-term to long-term perspective can utilize any decline in defense stocks as a buying opportunity. He specifically highlights Bharat Dynamics and Bharat Electronics as promising picks based on their long-term chart structure. If you're interested in these stocks, Palvia recommends waiting for another 3% to 4% decline before re-entering. Moving on to the metal sector, Palvia notes that most large-cap stocks are moving in an upsloping channel, indicating a potential continuation of the uptrend. He mentions Tata Steel, Hindalco, and Jindal Steel and Power as attractive options, with potential targets ranging from 168 to 170 for Tata Steel and 690 to 700 for Hindalco. It's essential to keep in mind that these are just expert opinions, and it's crucial to do your own research and consider your individual financial goals before making any investment decision. We'll continue to monitor the market trends and bring you more insights and analysis to help you navigate the world of stocks and finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the latest developments that could impact your financial well-being. In this segment, we're going to explore a story that's been making waves in the global economy, and it has to do with the value of the US dollar. As you may know, the US dollar has long been considered a safe haven currency, but recent trends suggest that its strength might be waning. According to some analysts, the dollar is overvalued, and its weakness could have significant implications for investors and economies around the world. One of the key factors contributing to the dollar's potential decline is the growing concern about the U.S. fiscal situation. The country's debt has been increasing, and some experts warn that this could lead to a decrease in investor confidence in the dollar. Additionally, the rise of other currencies, such as the euro and the yuan, could potentially challenge the dollar's status as a reserve currency. Now, it's essential to note that the dollar's value can be influenced by many factors, including economic growth, interest rates, and trade policies. Some experts argue that the U.S. economy is still strong, and this could support the dollar's value. However, others believe that the current trends suggest a potential shift in the global currency landscape. It's also worth mentioning that foreign investors hold trillions of dollars in U.S. assets, and if they decide to sell or reduce their holdings, it could put downward pressure on the dollar. This, in turn, could have significant implications for the global economy, including potential trade imbalances and market volatility. As we navigate these complex issues, it's crucial to remain informed and consider multiple perspectives. We'll continue to monitor the situation and provide updates as more information becomes available. In conclusion, the potential decline of the US dollar is a story that warrants attention, and we'll be keeping a close eye on its developments. Whether you're an investor, a business owner, or simply someone interested in the global economy, it's essential to stay informed about the factors that could impact your financial well-being. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to take a closer look at two interesting stories that caught my attention. First, let's talk about the Commonwealth Bank of Australia, which has been making headlines with its remarkable share price growth. According to a report by Elizabeth Knight in the Sydney Morning Herald, the bank's share price has soared since its listing, and it's not hard to see why. With a steady income stream from dividends and a loyal investor base, CBA has become a darling of the market. But as we all know, past performance is not necessarily a guarantee of future success. The article highlights that the bank's earnings growth is expected to be subdued, and it's operating in a highly competitive market with slowing economic growth. This has left some analysts perturbed, and they're cautioning investors to be careful. As I always say, prudence is paramount when it comes to investing. On the other hand, we have a more positive story from India, where rural areas are finally getting their fair share of bank credit. According to a report by the Economic Times, the share of big cities in outstanding bank credit has shrunk to 60% in December 24, from 65% 5 years ago. This is a significant shift, and it's great to see that rural India is now getting more access to formal financing. The article attributes this trend to the reverse migration spawned by COVID, which has helped prop up credit demand in the hinterland. Additionally, private sector banks are now heading into the villages, with 66% of new branches opened in FY24 being in rural and semi-urban areas. This is a great example of how digital channels can complement physical branches, improving banking penetration in smaller towns and villages. As we close out today's show, I want to remind our listeners that investing is all about balance and perspective. While it's essential to be cautious and aware of potential risks, it's also important to recognize opportunities for growth and development. Whether you're investing in the Australian market or looking at emerging trends in India, remember to stay informed, do your research, and always keep a level head. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.